Okay, so Rob asked a question: is his fib placement correct? And I want to kind of walk you through this. So, Rob, your fibs were here's your high, and you chose this high because we see a pullback, and you've got the bottom of your fibs right here. Okay, now um, uh, your fib placement is correct, but there is a better fib placement. Let me kind of walk you through it. Sometimes we'll see this, actually, many times, the chart will do this, right? Ever so slowly. See it? And then, boom, chart will do that. Then it'll range a little bit, right? Thing is this, if you notice, you probably might be thinking, maybe in fact, um, let's just do this right there, like that, okay? And you're probably thinking, this is probably where I would put my fib from here to here. The challenge is this, that this, let me remove this fib. This here, this slow and steady, you have to visually see it like this. Because it's accumulation, that's why. Now, one way to help you see it that way is to basically box it off, rectangle it. See that? In fact, we could even do this, right? Like this. And on this here, let's say price breaks up to the upside. Let me see if I can drag this. Okay. Well, and then from here, you'll see price range. You have to train your eyes to see this. What you want to do then is to basically box this off. Right. So that being the case, the question is this the correct fib placement? Well, previously you might have had your fibs like this, right? Like that. But the correct fib placement would be like this. The correct fib placement would be, look, there's the fib. Oh, there we go. Right there. The reason is because this is the order block that created this bull run. Okay? And because you have to visually see this as accumulation, even though it is slow and steady to the upside. You have to visually see it as accumulation. This is accumulation, this is accumulation. This is the breakout to the upside. So that being the case, going back to this, let me show you, let me walk you through it. So here's what you visually see. Okay. Now I'm going to grab all the internal liquidity, right? And this is really a wacky looking accumulation, but it is what it is. It's just the way they operate, right? So here's the impulse to the upside, right? Then we have this here. Then we have this accumulation. This is accumulation right here. And then another impulse to the upside. Okay. Now watch. If I were to box this off, I've got, it's pretty much like that. Yeah, that's it right there. And then I've got this here. Then you have an impulse to the upside. See this impulse to the upside? Right? So your fib placement right now is from here to here. All right. And then you have this here. Let me see. Then you have this impulse to the upside. The fib placement, which would be the order block that created the bull run, would actually be this right there. This is on the 1 hour, and this is the trading range I would be looking for, 50 or better. The reason is because, see, this was a slow and steady. This is accumulation, push to the upside. We could say that this is it right here. The challenge is that now you're asking for the price to push into this accumulation, right? So it's best that you, because price will come down to this accumulation, right? Then take off. For now, I would put it on the order block, right? This order block that created this push. So look how shallow this is, right? Now, if price breaks this, you know that this 50, this fib range needs to be placed here. Then this would be the correct 50 or better. But nonetheless, think about this. If the price breaks here, the hour fib would be this, right? That's where it would be. Now let's take a look at something. On the 4-hour time frame, what is the fib that would, if broken, would be BMS confirmation of change of trend? It's actually the one you had posted earlier. So it is correct to put your fibs here on the 4-hour time frame. But we need to go to the 1-hour time frame first to look for a trading range, because we want an entry on a trading range. Because price, high likelihood, might not come below this, might not even hit this, because of all this accumulation right here. Because remember, this is accumulation. It is the slow and steady to the upside. It's this, slow and steady to the upside, breakout. Your fib, this is the 1-hour fib right here. Here's the 4-hour fib right there. So you have two fib settings, the 4-hour and the 1-hour. The 1-hour is going to give you a trading range. It's going to give you where institutions will dig into this and give you an entry for continued buy. The 4-hour fib placement is basically going to give you the identification of a switch in market structure, right? It's going to give you the identification of a break in market structure. If you have price hit these 2 points, right, we now have a change in trend. So keep that in mind. The 4-hour is going to give you confirmation of change of trend, right? And the 1-hour is going to give you the, yeah, that's it, SMS. Come on. All right, here we go. What? My computer's been acting real funny. Oh my gosh. Look at that. Okay. The reason is because I've had all these applications open for so long, and I need to just restart my computer. It's so weird. Okay. So anyways, this would give you a BMS to the downside, right? So again, what do we have? We have a potential for an SMS. This is, pretend this is the 4-hour, by the way. This is the 4-hour fib setting, which is the 4-hour fib setting up here. It's the 4-hour fib setting from here to there, which was the one you said, right? It is correct, but the to find a trading range, you need to bring it to the order block that created this bull run. Now you say, hey, Julius, how come you don't put it to this right here? You could, right? But it's been my experience to do it to the closest order block that created this bull run, right? Because this will give us a trading range. Because this is accumulation, you know? This should look like this, you know? That's what it should look like. All right. So if you did it here, I would prefer it be here based on my back testing, but you could do it here. You could. Just wanted to kind of walk you through that. Okay, so I hope I answered your question. Remember, the important thing is that you are looking at this slow and steady to the upside, all this accumulation, then a breakout, this impulse. This BMS impulse, creating a new range, is really accumulation. It's this. It is accumulation. What is accumulation? It's a, they're gathering contracts, trying to determine, should I go up, should I go down? He's got his bias. Market maker has his bias direction he needs to go to, which is right now to the upside, because that's where all the order flows are going. But for the most part, this here is the slow and steady is the accumulation. It's sideways ranging accumulation of contracts, just like this sideways ranging of accumulation of contracts. Okay, so that was like a 11-minute rant. I hope you got it. Let me know if you have any questions, and I can answer them for you. Thanks.